Good morning, folks, and welcome to this morning's video. So I hope you had a great weekend. I have three pairs on watch this morning. Those are Kiwi Yen, Aussie Yen, and CAD Swiss. And just to say that I am now officially a funded trader as of late yesterday evening. I applied for funding from our in-house fund, the Falcon Fund, and that was approved last night. I applied for that on Saturday. That was approved last night. So if you're watching this video from outside of our community on YouTube or on TradingView, there is a link on my YouTube profile, on my YouTube channel, and in the link of the description of this video where you can find out more about that community if you wish to do so. If you don't, that's absolutely fine. But I will be looking through, I'll be familiarizing myself later today. I've got a lot to do in my personal life, some things to sort out, but I will be familiarizing myself later today with the new platform and familiarizing myself with how to actually place a trade through the funded account, which I've now been given, but I'm sure I'll figure that out in no time at all. But without further ado, let's break down these pairs. So Kiwi Yen, Aussie Yen, and CAD Swiss. On the higher time frames on Kiwi Yen, we have this high here, which according to my data is an all-time high. Okay, we near missed to it. That's often a clue that we're going to come back to that area to take out the liquidity that we near missed to. Okay, we have this element to it as well. We have this 1, 2, 3, which taps into that area. Excuse the drawing. We have the middle section, which itself has a 1, 2, 3 in it. Okay, so these patterns that we look for are fractal, as I've mentioned in the past, and then we have this corrective move up to that area, and then right near the end we have a bit of momentum coming in, which is the whole thing is a textbook example of how structure typically plays out. So we tap into that area, we break above, catch people on the wrong side of the market, and then move to the downside. I talked previously about how I thought that this was just profit taking. Okay, so we had the start of this channel here, we have this structure here, we have the start of this channel here. Price taps into the start of that and then moves to the upside. And I said to you that I thought this was just profit taking because price had no business coming up all the way back up there because it had already washed out all of the liquidity, most likely. Okay, so as we drill down with that in mind, what do we have? We have a 1, 2, 3. What happens? We break above, catch people on the wrong side of the market, and then we've pushed down. Look at this daily close here. This is about as textbook as it gets. There's really not that much to analyze. There's nothing confusing about this whatsoever. Not if you've been trading this way for several years. Okay. One thing I've been factoring in more recently is even when we get a bearish daily close like that, often we will still pull back 50% or so of that previous candle before moving in the forecasted direction. That is something I'm trying to pay more attention to and give more mind to. In the past, I think I was a little bit more of the belief that when you got a candle like this, it just followed through. But this is one of the teachings that we've been taught within our community that I'm trying to pay more attention to. We have you can see this 1, 2, 3 last leg. We break above. We have a bit of a hanging man situation there. And then we get the momentum to the downside. Okay, so I'm just seeing this as a potential move to the downside, an impulse correction continuation to push lower, potentially to take us down to these areas, okay, to tap the base of this structure, okay, but certainly as a first target here. And you might be thinking, well, why here? Why am I targeting there? Well, one, on this move up, this is the sharpest move that I can see, okay. The sharpness often indicates where the liquidity is, okay. Another reason is the fact that we have this impulse correction potential continuation, if we measure the legs, okay, so we assume that the continuation leg out of the correction is of a similar length, that would take us down to there as well. So mathematically that lines up. If we took it from the break, we'd push a little bit lower. Okay, the reason that's significant is because what I'm trying to factor in is after a move like that, a 1, 2, 3, price would likely need to build more volume before continuing, even if it does continue lower to these lows here. Okay, so that would mean that we'd likely get a deeper correction in this area, okay, before price continued in the forecasted direction. The other thing that I'm factoring in is that would also be, that area would also be about 50% of the range, of the overall range, which is also where we typically tend to see larger structures. So I'm factoring in all these things. And if I'm going to be trading someone else's capital, I need to be more mindful of the fact that it's not my money, and I need to make sure that I'm not unnecessarily sitting through risk, because the longer you're in a trade unnecessarily, you're exposing yourself, and in my case, somebody else's capital, to more risk. So I'd rather just be in and out, let the market consolidate in that area if it's going to do so, and then we'll reconvene. Okay, so if we just drill down, you can see that we may have. So what I'll be looking from this pair today is I'll be looking for, with all of that in mind, I'll be looking for a 3-touch 1 hour continuation, or a 2-touch 1 hour continuation with a 3-touch structure approach. This might be the middle section. What have I just shown you on the higher time frames? That typically speaking, when we get close to an area and we narrowly miss it, we often get something like this. Okay, the corrective sell-off, as people try to sell this too early, a lot of FOMO would have taken place here, whilst the orders that are still up there and being placed in the area are dragging price up, which gives you the kind of pendulum effect. And we may, if we just drill down to the 5-minute chart, you can also see an element of where the first touch might be. We get that kind of 3-touch structure. We shall see how that forms. I'm not going to surmise too much. I'm just going to let the market show its hand by letting that alert trigger, and then being ready to execute if the market presents a setup. So down to that low, we would have 6%. In this instance, I wouldn't be setting to take profit there. I would actually be targeting this low here, just because we've come from a massive impulse down. This volume would likely generate the next wave lower. Okay, so I wouldn't expect this low to hold. So therefore, I'm not going to be setting to take profit there in this instance. And what I would be doing is I'll be measuring from the range that we just broke above down to there, and I would actually be setting to take profit there. Okay, and I would trail my stop loss accordingly. So that is, just press the wrong button there. That is Kiwi yen. We shall see what presents itself. If anything does, if it doesn't, it doesn't matter. I'm not gonna FOMO in like these sellers are doing at the moment, especially when I'm trading someone else's capital. Right, so that is Kiwi yen. So it's going to look very similar, with Aussie yen being the sister pair of Kiwi yen. So on the higher time frames, we see that all-time high again. We also see the 1, 2, 3 element there. We get the middle section again, and then what's happened? Same story as with Kiwi yen. We've broken above, caught people the wrong side of the market, and pushed to the downside. Okay, if we just zoom down, you've got the element of the 1, 2, 3, which is slightly more clear on the 4-hour chart. Let's just have a look at Kiwi yen for a second. Yeah, one of the reasons I prefer Kiwi yen, it's negligible, the difference between them, but you can actually see the structure on the daily chart, whereas with Aussie yen, you can't see the first touch so much. It's a negligible difference, but just a little observation. Regardless, this is looking crystal clear. We have the 1, 2, 3. We break above, catch people the wrong side of the market. We retest the back end of this. We retest the back end of this consolidation there, and then we move to the downside, and we've got that heavy-bodied daily candle once again. Same rules apply for me with this. We have the sharp move there, okay, which would be half of the range from here to here. So where we'd likely get those larger consolidations. We have the near miss. We have that element to it that I was talking about as well. The 1, 2, 3, which would likely give us a larger structure down there, because this move would likely need to build volume again for the next wave lower in that area, because that 1, 2, 3 move would have completed. If we just zoom in, are we looking for the same thing again? So exactly the same as I was looking for on Kiwi yen. Okay, let's just put that guy away for a minute, and then once again we have that element of that. Okay, so we may get that pushed down. This could be ready by the end of the day. It's possible. Okay, if we got that, I would be looking for that risk entry from the top there. There's no inflection points or sharp hook points above. I like the fact, just to touch on it, that we'd also be retesting the back end of that as well. So that's a point of interest. So we had that structure there. We tapped into that. We moved to the upside. So there's likely volume there. If we break above that, think about how many stop losses would be above there. That's a terrible drawing, but you get the point. So that is what I'm going to be looking for from Aussie yen. Okay, so we'll let the alert trigger, see what this pair wants to do. And then last up is CAD Swiss. So CAD Swiss previously, if you remember, I was looking for longs, okay? And this is where not being egotistical helps, because what a lot of traders do, you'll see it on TradingView, them all telling each other that they're wrong. Everybody telling each other that they're wrong. I was looking for longs previously, but the market has shown me something else. Okay, so previously I was looking for the impulse correction continuation to push higher because we were at an all-time low. Okay, there was always the potential though that this could be the retest of the back end of that, but I was seeing this structure here leading into that as potentially people being caught the wrong side of the market. However, if we decipher the price action, you can see what have we done, what's happened. So at the moment, okay, what's happening at the moment? Well, first of all, we have this heavy bodied bearish candle, which in the eyes of many is the retest of the back end of this low. Okay, so that gives me an indication that we would push down likely to here and potentially a lot lower. Okay, so this is the retest of the back end of all of that. It's retested it a couple of times, retested it once there. Okay, if we just zoom in, we also have a near miss to that area. Look, the other clue is that this has become very wide, okay, relative to the impulse up which has preceded it. Often these become more neutral, so we don't get the continuation because it's got so wide. The width is longer than the impulse, and then we get what would be an inverse. I'm thinking that this could potentially be an inverse M style pattern where we get that, tap into that, and then move to the upside. Okay. The other factor is that we had the near miss to that high. We broke above. We tapped into the area that we near missed to by way of this structure. Okay, we have the 1, 2, 3 where the second and first touch missed that. We also have a 1, 2, 3 leading up to that. So I'm not surprised. I'm not surprised that we have responded from that area. Bit of indecision there, but then we get the follow through. And if we just analyze this is CAD Swiss is not always the cleanest pair, but when it starts to respond to structure as it has done, okay. So we have that 1, 2, 3 with the second and first touch missed the hook point. We then tap into that, retest the previous low, and then move to the downside. Okay. So it's responding to structure. That's a key point there. Okay. We've broken below this low. We've done it impulsively. Okay. Often the base of the structure is where we're going to, rally to the upside if we're going to do that. But we completely smash through it. If we just drill down to the 5-minute chart, there's a little hook point here, which is a little bit more prevalent on the 5-minute chart. We have that high there, and then this little high narrowly missed it. That gives me a clue. That in itself gave me a clue that we might gravitate back up towards there, especially when it's kind of the retest of the back end of a sharp move there. Okay, so what I'll be looking for from this pair is the same that I was looking for from the other two pairs, is a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with the 3-touch structural approach. And if you're new to my videos, if you're wondering what I mean by a 2-touch continuation with a 3-touch structural approach, I just mean either what I've just drawn or this, okay, something like that, okay, maybe a bit more with a bit more of a base, but something like that, or this, either or, and then I'll be able to manage it down to that low for 3.82 or something in the region of that. And then my target in this instance, because of what I said about the inverse M style pattern, would actually be down here. I wouldn't expect to catch all of that in one go if that's what we're doing. Okay, just to touch on it, we have the one thing I meant to say as I was zooming down is that you can see as well, we have that solid bodied daily candle as well. That's another positive. Okay. And then that would be my target down there. And then, so I'd manage the trade to this low. Okay. And then see how we respond from there. If we smash through, then I will trail my stop loss just above the low. and then see what happens. Just trail it thereafter using the mechanical. I would use the mechanical management tool to measure from range to range, and I'd set a take profit there whilst trailing my stop loss at the same time. So that's what I'm going to be looking for today, folks. I hope you've enjoyed this. I'm going to dig into all the other stuff that I've got to do today, which includes sorting tax out, sorting insurance out for my dog, and a bunch of other things. And then, of course, figuring out how to execute trades on my new trading account. Until such times, I'll be trading my personal account, and then once I've figured that out, I'll be trading my funded account as well, instead of. Okay, anyway, thanks very much for watching, guys. I hope you've enjoyed this video, and I'll see you again in the next one. Enjoy the rest of your day.